What is going on, everybody? Welcome back to the Kev Capital Chart of the Day series, where we spend 5 minutes or less pulling back the curtain on some of the most important charts in the market and what it means for you. Today, we're going to quickly talk about the S&P 500 on the weekly time frame. Now, there's a chart that you can see right here that I've been tracking for quite a long time now because there's this interesting confluence between the highs and the lows of major corrective phases or bear markets and the higher time frame golden pocket in 703 and even 886 fib. Every time you measure your fib extension from those highs to those lows, the S&P loves to find another major top at that golden pocket extension. Over the last two have been the most apparent because it's been accompanied along with bearish divergences in the chart via the RSI indicator or even other indicators. For example, back in 2022, we found our major top at the golden pocket extension right in between 4,400 and 4,700. That followed along with a major bear market, not a corrective phase. Obviously, many of you know if you were around then, we had 9% inflation. The Fed was extremely hawkish, raising rates at a rate we've never seen before since the 70s. Liquidity was being sucked out of the market. It was a really bad time for the macro environment. Now, again, look what happened. We bottomed out. We had a major rally for months and months and months, all the way up to our Q1 of 2025 highs. But the funny part is look where that was after this entire rally from the bottom in October of 2022 all the way to 2025. It was the golden pocket extension in the 703. We topped out just above the 703. Pretty funny how a major macro event coincided with that exact level, and then obviously we saw that major drop going into late Q1, early Q2, 20 to 25% drop across the board, and then eventually, right, we found a bottom. All of those headwinds kind of moved past us, and now we've just been on this ripper of a rally ever since, with almost little to no correction at all ever since April of 2025. And the reason why I bring this chart to your attention is because we're getting close to the next golden pocket extension between 7,100, 7,300, and then the 886 at 7,600. And I do feel, based off the current macro environment, based off current fundamentals, and we're going through earnings right now, I do think we have the momentum to get into that range. I think it makes sense at this point. Now, something to point out here is look what happened when you topped in the early stages of Q1 of 2025. You had lower highs on your indicators. For example, for the video, we'll use the RSI. Price action was getting weaker and weaker and weaker going into this major resistance zone via the RSI. Same thing is happening now. We're getting closer to that major resistance zone. We're only a few percent away, and you have the same lower highs occurring on the weekly RSI. Even other indicators are starting to show some signs of weakening, but for the sake of the video, I'm not going to go over every indicator. It's just something that I want on your radar, right? And remember something. Look where the S&P is at right now. We have rallied from the April lows 45.3%, and we've had one small pullback that lasted a few weeks. So really, we've rallied almost straight up 45% without any significant pullback. You're entering into what is going to be the golden pocket extension with the 703 and 886 with bearish divergences. Now, I know things look rosy and peachy, and inflation's coming down and the Fed is cutting and earnings still look solid, and that's great because the fundamentals around the market are more important than anything, right? If earnings growth is projected to be higher and companies are hitting on that and they're being revalued higher, then by all means send it higher. But it's just been shown that anytime you hit these golden pocket extensions and you have this weekly bearish divergence, it's a sign that there is some selling occurring in the background. And I have other indicators that show me via whale money flow and net money flow, there is money that is starting to subtly flow out of the markets, probably via some profit taking. So I just wanted this to be on your radar because this is something that I'm going to be watching closely coming into the coming weeks and months. I do think that there is a very high probability we hit these ranges on the S&P, and then from there we're going to find out what happens, right? Because going into those major resistances with bearish divergences usually doesn't pan out very well. You typically get a bigger correction, could be anywhere from 10% to 15%. 20% would be a bear market. If you have a good macro environment, I don't think we have to have that. But just, again, somewhere in the lines of some type of bigger corrective phase, some type of cool off before eventually resuming higher as long as the macro environment stays good. I could see that happening here sometime in 2026. So yeah, we'll just keep our eye on it, and I wanted you guys to have it on your radar also. So that's pretty much it. If you guys enjoyed the video, please comment, like, and subscribe. If you have any questions, again, please comment below. And if you have some time, check the links in the description below. Beyond that, you guys have a nice day. Peace out.